Bill Williams has developed quite a bit of time ago. It is a fairly simple and straightforward indicator. I will show you how it can be put into good use and just discuss it overall, what the indicator looks like, how it is manifesting on the chart, and we'll take it from there. And of course, at the very end, you can ask your questions. But now, before we get into the actual webinar material and the topic, I would like to advise you that all the webinars, they are recorded, and all the recordings are uploaded into the past webinar section, which you can access if you log into your Hot Forex account. Scroll down to the bottom of the page. In the footer, you'll find a link that leads you to the education page. And there in the education page, you will find another link that leads you to the past webinars. And there you can review all the recordings of the past held webinars, not only by us, but also by the Hot Forex team themselves. And I do highly recommend to take 1 hour a day to go through one of the topics there, because you will certainly find a lot of useful information. And it is also really good to go through, if you already have reviewed all the topics there, then you can really just start over, because it's not a bad idea to simply refresh in your memory about certain things, about trading in overall, about the industry, about the market. So just to always keep yourself up to date and with a refreshed memory, right? So before we get actually into the topic, I will need to go through the risk disclaimer, so please bear with me for a couple of moments. This material is provided as a general marketing communication for the information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as Forex and derivatives may not be suitable for only investors, as they carry a high degree of risk to capital. Please ensure that you fully understand the risks involved, taking into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure. Okay, one moment, please. Mr. Crucego is saying my screen is blank, but I do not have any other reports of visuals not coming through. It does look like everything is operational. So we're going to continue from here on. I can just stop sharing and start sharing again. Maybe that will fix it, but there is really nothing else I can do for you. So I apologize for that if that's the case. And you will simply need to review the recording later on then. Okay, so with this disclaimer out of the way, our agenda for today will be a quick introduction, then what is this alligator indicator, then the formula behind it, then how to use this indicator, about trading ranges and breakouts, and just to conclude everything we have talked about during today's webinar. And of course, at the very end, you can ask your questions, so definitely stay tuned for that. And you do not have to ask questions specifically about today's topic, and you can ask questions about trading in overall, and I will definitely do my very best to answer to all of them. If any of your questions remain unanswered for whatever reason, then you can always send an email to webinars@hfm.com, and the Hot Forex team will also be more than happy to assist you. Okay? So let's kick this off. I am one of the senior traders here in Blue Sky Forex. We are an educational research and trading group. We teach various different strategies and also provide 24-hour trade support to allow you retail FX traders to make better and safer trading decisions. Now, what is this Alligator indicator, and where does the name come from? Now, Bill Williams, as I mentioned earlier, is the actual creator of this indicator. He introduced this indicator to the community already back in the 1995. So it's actually not as old as some of the more prominent indicators like the stochastics that's already created in the 50s. So in terms of that, so the Alligator is not so old, although it's still more than 20 years old. So it is still widely used to this date. Now, the Alligator, its name is also a metaphor, and this is because it actually simply consists of 3 lines. So it's not a one-line indicator, it consists of 3 lines. And those 3 lines, like moving averages, are overlaid on the pricing chart itself. Those 3 lines basically, metaphorically, are representing the jaw, the teeth, and the lips of the beast. So these are 3 components of an animal, of an alligator. And these 3 lines are there to help the trader confirm the presence of a trend and its direction. And it is as simple as that. Now, as we all know, come to know perhaps, as a trader, as a retail trader, that the most profitable trades are trades that you can initiate when attempting to trade along with the trend. So trend trading is the main way how to be most profitable, because with a proper and strong trend, the highest profits lie. Okay, if you can get into a trend and trade along with the trend in the very beginning, then you have the potential to earn most profits. Trading in a ranging market is definitely possible, and you can earn some decent profits there as well. But the opportunities are not so lucrative in terms of ultimate final gain. Okay. So any indicator that helps you identify a start of the trend or already ongoing trend is good to have. And the best indicators, I think, would be that help you identify the very starting moments of a newly forming trend. Okay. Now, usually the starting points of a trend happen with a breakout. And usually you will have certain amounts of consolidation before the breakout happens. The price, movements, they calm down. You have less volume, less volatility, less price fluctuation. So it goes into a narrow consolidation range. And at one point, either due to some proper news event or a simple price, just traders coming into the market and actually starting to trade that asset, maybe on the market open, then you will have a breakout, right? And then these breakout moments are actually really great to be able to catch, right? Because then you have a high chance of catching the really beginning of a proper trend and simply ride the trend for profits. If you are a longer term trader, then obviously the trailing stop will help you lock in some gains, and gives the trade the ability to earn some more profits for you. So the Alligator indicator in that sense is really good, because it will give you an idea when a new trend is potentially about to start. Okay. So the Alligator indicator also helps the traders to designate impulse and corrective wave formations, but the tool is best combined with a momentum indicator. So as we are talking about technical indicators, and I do mention this almost on every webinar as well, that if you're dealing with technical indicators, then one shouldn't really be trading one single indicator and its feedback that it gives you alone. Okay, so you cannot simply take one indicator, rely on whatever information it gives you, and bluntly place trades based on that feedback. It doesn't really work out longer term, and you should really be careful about that. Okay, there are some indicators that we talk about in our webinars that you could potentially trade alone, one of them being Bollinger Bands, for example. And yes, that is true. Although you're not really trading the indicator completely alone, you're still trading the price action. Okay, the indicator is simply there to give you some idea what may be going on the market. Okay. The Alligator also shouldn't really be traded alone completely, so please do combine this with some other indicators like momentum indicators that will potentially help you really catch the next big impulse wave along with the direction of the trend. Okay, so now there are multiple trades with the Alligator indicator. We're going to get into the actual visuals as well in a moment, but first of all, the theory as always. There are multiple trades with the Alligator. You have 3 lines as mentioned earlier, and if those 3 lines are entwined with each other, then it is considered metaphorically that the Alligator's mouth is closed and it is said to be sleeping. Okay, so nothing's really happening. Now, as he sleeps, he does get hungrier by the minute like any animal would. And the animal then is basically waiting for a breakout from his slumber, and then he will eat. Okay. Now, when the trend takes shape, the Alligator wakes up and starts eating. And once satiated, the Alligator closes his mouth once again and goes back to sleep. So this is all metaphorically, but we'll come to actual example as well in a very short moment. So since the market evolves from trending to ranging, we can think of the market much like the Alligator. When the market is ranging, the Alligator is sleeping, and when the market shows signs of a trend forming, then the Alligator is going to wake up and starts eating. Okay. So in the image here at the bottom, let me just actually highlight my cursor as well. I always forget to do that because that's something I've just started doing, because some people had a bit difficulties seeing my mouse cursor, which I can understand. That's fine. Right, so I made this cursor red. You should be able to see this a lot better now. So the Alligator formula. At the bottom, you are seeing the Alligator indicator in action. So as mentioned, it consists of 3 lines, and it's actually really straightforward. Those 3 lines are moving averages. Okay, there's a small trick behind those moving averages. They are not simple moving averages. So you have the green one. Of course, the coloring can be different depending on the tools that you are using, but the default colors should be green, red, and blue. Okay. Now, the green being a quickest moving average, and the period for the green moving average is set to 5, and it is displaced into the future by 3 candles. So all of these moving averages in the Alligator indicator, they are displaced into the future somewhat. Okay. Now the green one, which is the fastest moving average with a period of 5, is displaced into the future by 3 candles. Okay, you can see here that this is the current time frame, the current moment, right? It's right now, and the indicator line actually ends 3 candles in the future. Okay, you can easily, do manual displacements as well of the indicators if you wanted to in a MetaTrader 4. But this is done automatically in the indicator settings themselves. And then the green line is the fastest one, displays 3 candles in the future. The red one, which is a bit slower moving average, it is having the 8 periods set to its parameters, and that one is pushed 5 candles into the future. So you can see here, this red line actually ends 5 candles past the current timestamp. Okay. And then you have the slowest moving average, which is the blue line, and that represents the jaws of the alligator, and that one is set to 13 periods and displaced 8 candles into the future. Okay, you can witness that as well here in the picture. Okay, so green is the lips of the alligator, the red one is the teeth of the alligator, and the blue line is representing the jaws of the alligator, all of them having a somewhat different period and a different displacement into the future. Okay. Okay, so how to simply read that indicator? When you have those 3 lines intertwined, you don't have a trend, a proper tradable trend forming. That means that right now you will have low volatility time. And if you're not really into range trading, or if you don't really find any opportunity at all to trade that asset, you may either simply take a break or find another asset to trade that has a bit more volatility and where you can find a better trading opportunity. Okay, so that's when all of those 3 lines are intertwined with each other. Then you have a relatively ranging market. So the very first thing that you should keep an eye out for would be the actual green line, which is the fastest moving average. That's the line for the alligator's lips, metaphorically, and that's the one you should be monitoring at first. So if you see the green line or the lips of the alligator cross both of the slower moving averages, the teeth and the jaw, then this is a sign that the alligator is probably currently waking up slowly, right? And if you also see the jaw and the teeth starting to turn in the direction of the green line, then it is a sign that indeed the alligator is potentially waking up, and you should be getting ready for a potential trading opportunity. There's a lot of traders that also simply use the current price relation to the alligator lines, and if the candles close above or below all of those 3 lines, then they can also enter the trade. Okay, that's also one approach to using the alligator indicator. Simply take those 3 lines, and whether the price is above or below those 3 lines, you can either have a long or short trading bias. Okay, and in such case, of course, you would need to use some other strategy or some other technical indicators to give you a confirmation of the current market condition and then trade accordingly. Okay, but if you consider the moving averages of the alligator, and if you're considering an uptrend, then the green line, which is the lips, which is the fastest moving average. One second. I got in the question section from someone that nothing can be heard, although the GoToWebinar module is saying the audio is coming through fine along with the picture. Let me just mute myself and unmute just in case. Maybe that will help. 1 second. Right, I hope you can now hear me. If anybody else has difficulties with the audio, just let me know. Probably if you do, you can't hear me anyway, so you will simply need to check the recording later on. I do apologize, but there's really nothing else for me to do here. Anyways, let's continue. Right, so the green line, which is the fastest moving average, that is the line that should be crossing the red and the blue line from bottom to top if you're looking for a bullish trading opportunity. And from top to bottom, going below the green and the red, sorry, the blue and the red line, if you're looking for a shorting trade opportunity. Okay? So if the green line passes the blue and the red one, and then the red moving average, which is the middle one, that one passes the blue one as well in an upwards momentum, like you see here on this image. The green line is passing both the red one and the blue one, and the red one is following. So the red one is also crossing the slowest moving average upwards, and this would be the exact setup to confirm that the trend is now actually starting, and then you will have a trading opportunity going upwards. Okay, but again, you shouldn't really trade this indicator alone. Use something else to confirm that this indeed really is happening, and only then, after a proper market analysis, you can place your trade. Okay, so the green one would need to pass both of the slower ones, and the red one should be following the green one and pass past the slowest moving average. Okay, so then the alligator will start feasting. It is really that straightforward. You can, in a way, consider this like there is a strategy, and that is called the rainbow strategy, that actually consists of, I think, 5 or 6 moving averages, all of them with a different period, with a different color. That is the reason why it's called the rainbow strategy. And again, it relies on a similar principle that if the fastest one crosses above or below the slower ones, and if everything, all of the moving averages are really matching up with this movement, then you simply initiate a trade. So the alligator has basically a very similar principle. Okay. Okay, sorry for the small hold up. You all know that sometimes I have to put my focus on the side. Anyways, so when you have this alligator sleeping, meaning all of the lines are intertwined with each other, there's really nothing interesting going on. There's basically either a really strong consolidation into a narrow price range, or the price is fluctuating between a potentially tradable range if you are a scalper. But now, the longer the alligator is sleeping, meaning the longer the lines are intertwined with each other, then the hungrier it may be when it actually wakes up. And this is basically, the longer the market is in consolidation mode, usually the heavier the breakout will be when the, so to put, the alligator wakes up. Now, the alligator usually does wake up when there is some kind of a heavy news event happening. Then obviously you will have a very, very strong breakout. Potentially after the news, of course, you have a certain amount of indecision. You have a battle between the bulls and the bears. You have heavy fluctuations of the price, going up and down. And so For that specific reason, we in our team usually suggest traders to keep out of the market around 15 to maximum 30 minutes after the news event. And this is mainly directed, this suggestion is mainly directed towards the beginner traders, because news trading is relatively difficult, because you must have a proper understanding of the market fundamentals. What are the news events? What do they mean? Why are they happening? And what kind of effect they have had of the market, to the market in the past. Okay. So news events can be tricky, and people should be really careful when these heavy impact news events hit the market. But with the Alligator indicator, when the mouth is opening up metaphorically, then you already should be looking for a trading opportunity. But the mouth opens up quite often already around 15 plus minutes after the actual news event hits. So the mouth doesn't usually open up immediately after the news event, so you may see some heavy fluctuation up and down, and the actual moving average lines will also be furthermore intertwined with a bit larger fluctuations than before the news event. So what I mean by that is that one second. So here you have an example where the lines are heavily intertwined, okay? And they're really, really close to each other, because here on the left side, you see really heavy consolidation into a really, really narrow price range. So here the Alligator is sleeping, okay? Now here, you see that the price is seeing a bit more movement now. This may have been some medium impact news or heavy impact news that didn't really surprise the market. So you have more price movements, but not a battle between the bulls and the bears immediately. So you have a little bit of increased volatility here, and you have a momentum movement upwards here. As these lines are placed further into the future, you only will start seeing the mouth opening up 3 to 5 candles in the future, okay? Okay, 1 second. Okay, so everything seems to be back now. Okay, this is the second time some kind of a disruption in the connection is happening, so I apologize for that. I really need to look into that. Okay, everything seems to be coming through. If you don't see the image or the picture, if you don't hear any audio, if it's really cutting up, then do let me know. Then we maybe need to be speeding this up and then wrapping up a bit sooner, because I really need to look into this technically. Anyways, here you have the Alligator sleeping. You have some increased price activity here, and it's clearly also shown in the moving average lines where the Alligator is starting to wake up. So you have the green line, you're passing the slower moving average upwards, okay? Here you have the red line following the green one, and it is also passing upwards from the slowest moving average, okay? So that means it is getting ready to eat. So here it is sleeping, here it is waking up, because the green line is passing both the slower moving averages, the red one is following, and here as the lines become further apart, they separate from each other, here it actually is starting to feast, okay? Here on the left side you have a bit more price movement, and you can still see that the lines are somewhat intertwined. On the very left side, probably you had also an upwards trend. Here is just a small pause in the previously established trend. That is the reason why these lines are intertwined. So it took a really quick nap before actually continuing its feast, right? So that is the thing you should be keeping an eye out for. If the green line starts to separate properly from the other lines, you should already be getting ready to trade. Okay, when the red line is following, then you should be ready to push the button. And if you really see that everything is matching up, and the green and the red line, they are separating from the blue one, and then eventually the blue one is starting to follow the direction of the green and the red one, then that would be your trade entry point. Okay. And it works, of course, the same way if we're looking for a bearish trading opportunity. Okay. This is already what we talked about. You have intertwined, market is at rest, trend is forming here, and that would be your trade entry. Now, one more thing you can, one more approach you can take towards trading the alligator indicator. If you have the alligator lines intertwined really heavily with each other, then you can establish the range that the market is trading in at the moment. For example, here you have the lines heavily intertwined. You had a really heavy downward trend here on the left side. Then the market went into a ranging mode, and you can immediately see that the alligator indicator lines start to intertwine with each other. And that's the best moment to establish a range where it is trading in. And then you can deploy a range trading strategy. Okay, you can also utilize Bollinger Bands in this case, because Bollinger Bands is really a great indicator to pinpoint your trade entries in a ranging market and also in a trending market, right? So Bollinger Bands, definitely a very useful indicator. I highly recommend to take a look at that. So in such kind of intertwining moment, when the price is trading in a range, just establish the high and low points of the range, and simply you can trade this range. Go short when it reaches the top of the range, and trade long when it reaches the bottom of the range. And again, use Bollinger Bands for that purpose as well. They really will help you. Now here on this occasion, it had quite of a rapid downwards momentum for a moment, and that is also causing these lines to show you a similar setup like you would have in the beginning of the trend. Okay, but the red line is a bit too slow to go apart of the blue one. Okay, so that's one thing as well. You can see immediately that the green one is quite quickly pulling apart from the red and the blue one. But the red line, like a magnet, is still pushing itself against the blue one just a little bit, and it is not pulling away fast enough. So here in this occasion, I would be a bit hesitant to actually enter the trade, okay, because that wouldn't be a good setup for me. Here, on the other hand, you can really clearly see that there is a sharp crossing of the blue line by the green line, Also, the red one is doing the same. So here, the trading opportunity is something that I would take. Okay. Now, please be advised that these, as these lines are pushed into the future, you will start seeing these crosses happening in the future as well. Now, the moving averages already are lagging indicators, and as they are pushed a certain amount of candles into the future, it does add a little bit to this lagging attribute. Okay, so you should be also extremely careful when utilizing this indicator, because you may get somewhat late into the trade. But if you have something that is really backing up the price movements, like a news event, then definitely a valid trading opportunity already with these kind of sharp crosses. Okay, so that would be the price activity you would be keeping an eye out for. You have the alligator lines crossing the blue one quite sharply, not like here. Okay, they're crossing together, and the red one is still lingering around the blue one. That wouldn't be really a good trading opportunity considering the price activity here on the left side. And here the price is going below the previously established range. So I would consider this, the price is breaking out from this ranging price action, and the lines are showing the same thing almost at the same time while it is happening. So my trading opportunity would be around this part, if you can see my red mouse cursor. Okay. Now, after the ranging, if you did enter the trade here when the price is breaking out downwards from this established range, the stop loss would potentially be just a little bit above the high of the range, and simply duplicate this distance from your entry going downwards, and that could be your take profit level. Now, this is by keeping the risk reward ratio at 1:1, which means that your take profit level is equal the distance of your stop loss. And you should always keep the risk reward ratio on the positive side. You never want the risk for each and every trade be more than the potential gains. Okay, so keep it on the positive side. If you're a beginner, then 1:1 risk reward ratio is more than good enough. Okay, you can even ante it up to 1:2, which means that your stop loss can be 50 pips and your take profit will be 100 pips in this occasion. When you get better at trading, when you become an intermediate trader, then you can ante up your risk reward ratio even further to 1:3, 1:4. You become a professional trader or an expert trader, you can go even further, 1:5. But please don't overdo the risk reward ratio, otherwise you will create a situation where your trades will have a hard time reaching your take profit level before the price reverses, and you may end up losing some of the profits or all of the profits, or even generate some losses with that trade. So don't overdo the risk reward ratio for sure. Okay. So the bottom line with this Bill Williams Alligator is that when the three lines, just reiterating everything again, so when the three lines are intertwined with each other, you have market in a ranging mode. And that's when the alligator is considered to be sleeping, and that's when the alligator is getting hungrier and hungrier over time. There's really no signals present at the moment, unless you want to trade within a ranging market. And if you are used to scalping, for example, then this is fine to trade as well. You just have to deploy a different approach, a range trading tactic, for example, and that is also fine. But these assets where you see the three lines intertwined, you can keep an eye out for, because at one point the alligator will wake up, meaning that the lines will start crossing and departing from each other. Okay, and that would be the moment you should be looking out for, because you want to get into trade just when the trend starts, because that yields the best trading opportunity, the highest profits. Okay. Due to the lagging nature of moving averages, and also the alligator indicator for that purpose, for that matter, you may not get into the very start of the trend immediately. So the goal should be to get into the trade as early with the trend as possible, obviously, right? Because that, provides you with more profits ultimately. And also, when the alligator is already in the feeding mode, meaning that the three lines are relatively apart from each other and moving in the same direction, that's the alligator feeding mode, you can wait until the price, pulls back a little bit, reaches the alligator jaw line, so the blue line, for example, and then trade along with the next impulse wave. That's also an option. And you'll be able to try to catch the new impulse waves after a price correction or a pullback. We also have the Bollinger Bands that can be utilized to trade the starts of the next impulse waves. And we have a specific strategy or setup called the Channel Surfer. We talk quite a bit about the Channel Surfer strategy or setup in our Advanced FX Trading Strategies webinar, so I highly recommend to take a look at that in the past webinar section. So you can combine the Bollinger Bands along with the alligator indicator to wait until the price pulls back and then trade along with the next impulse wave. So keep that in mind. Definitely check out Advanced FX Trading Strategies. Look for the Channel Surfer strategy and combine that strategy with the alligator indicator for maximum potential. Okay. So this is basically all there is about this alligator indicator. It is really fairly straightforward. It is an easy indicator because it simply consists of moving averages, okay, that are displaced into the future. Similar is a rainbow strategy with moving averages, so you can also look into that, but utilizing that strategy or that approach alone, simply with moving averages, again, may work out a few times for you, but ultimately for longer term, it's a recipe for disaster. So please analyze what is most important on the market, and that is the price itself. Okay, so let me take questions right now. I do apologize for the small pauses. I did catch a little bit of cold, so my voice may also be a bit crackling. It may be annoying a bit, so I'm sorry for that, but it is what it is. So let me just open up the question section. Again, you can ask questions about trading in overall. You do not have to ask questions about today's topic specifically. And if any of your questions remain unanswered, or if you have any questions later on, then you can also send your questions to webinars@hfm.com, and they will also be more than happy to answer your questions. Just one moment, please. One more thing to mention is that the alligator indicator is already available in MetaTrader 4 by default. It is located under the Bill Williams category. Bill Williams has a separate indicator category in MetaTrader 4. It does consist of, let me see, 6 indicators. One of them being an Alligator indicator. And we also have awesome oscillator there that we have also had a webinar about. So you can find it under there. Now, if you add this Alligator indicator onto your chart, you can also adjust the periods of the indicator separately for every line. We can also adjust the shifts for the indicator separately for every line. And but I would just recommend to keep them at the default setting at first, of course. Later on, if you have any time, you can try to customize them around and see if any other setting or any other parameter combination will work better for your strategy. I do always recommend people experimenting, trying out different settings for the indicators they are using, because depending on the assets that they are trading, depending on the approach they're taking towards trading and market, different periods, different other settings for different indicators may work differently for different people, depending on their strategy and everything else, right? And by default, the moving averages in this Alligator indicator, there are also smoothed out moving averages. They are not simple or exponential moving averages. They are smoothed out, and they are applied to the median price, which is the high-low divided by 2. So the median price is where the smoothed out moving averages are applied to. We're not dealing with simple or exponential moving averages. So that is also one of the differences there. Loretta is asking, please, 2 words about the channel strategy. Okay, it's the channel surfer. Fine. Really quickly, excuse me. The Bollinger Bands is the indicator that is utilized for this purpose, right? The Bollinger Bands consists of 3 lines. One of them is the middle line in the center, that is the moving average, usually a simple moving average with a period of 20. And then you have 2 lines. One of them is above the moving average in the center, the other one is below the moving average in the center. So you have 3 lines, and those 3 lines create this kind of a channel, okay? So within this Bollinger Band channel, you see the price, let's say it's trending steadily upwards, and thus the Bollinger Bands, all those 3 lines are also moving in the same direction, let's say upwards, in a steady manner. So the top band, the bottom band, and the moving average in the center, they are all sloping upwards. They are relatively parallel to each other, creating this steady channel of the Bollinger Bands moving upwards, for example, right? Now, in such kind of a channel surfer scenario, you will witness the price bouncing between the top band and the middle band in the center. So the top band and the moving average in the center, the price is moving between that part of the channel when it is moving upwards. At one point, of course, it will face a pullback or some exhaustion. You have some indecision perhaps before the next impulse wave starts. And when that happens, the price is coming to the very middle band, and that would be your kind of a jump pad off to the next impulse wave. I don't know, if you close your eyes, maybe you can visualize this a bit better. There is no slide here on this webinar where I can really show this for you. But when the price comes to the middle band, sometimes it comes down to the bottom band as well during a pullback. And when the price reaches those points, then you would be initiating a long trade to trade along with the next impulse wave upwards. Okay, I can't really put it in words a bit easier without any visual representation or assistance. So perhaps it's still better for you to look into the Advanced FX Trading Strategies webinar recording in the past webinar section for a better visual understanding as well how the channel surfer works. Okay. Wait, 1 second. Okay, and Netakeli is asking, is there a candle that tells one when to trade? Okay, 1 second. In this kind of scenario, you will have different candle formations really mixed up, and then the crossings of the moving averages in the Alligator indicator, it may happen a little bit at different times, of course, right? Sometimes you have a stronger momentum downwards out of the range, for example. Sometimes you have a bit slower, so these moving average crossings will happen at different times. And the candle formations at those different times will obviously vary, so you will not have a certain candle setup that you should also keep an eye out for to trade if you're trading this Alligator indicator and waiting for a breakout from a range. Okay, but you can always keep in mind that here on the left side, for example, you can witness a range happening. You just have to keep an eye out on the price levels, right? If you mark down the price range for the ranging market, and then you witness that the Alligator opens its mouth and the price at the same time drops lower or goes higher than the previously established range, then you have a breakout from this range. And if you start adding perhaps some trend lines, you perhaps may witness that the price is also breaking out from those trend lines after a wedge formation, for example, right? And then you simply have additional confirmation that you should either go long or go short. There is no specific candlestick setup for you to monitor along with this indicator. Davidson is asking, when using this strategy, should one change between time frames to be able to see a quality setup? And this is the first question. Always you should be checking the larger picture, what is actually going on in the market. So for example, I am mainly a day trader. I do trade mainly on 1 hour chart time frames. That's where I do most of my chart pattern analysis. That is my favorite chart time frame. Sometimes I do zoom into 15-minute charts and 5-minute charts to really pinpoint my trade accurately as possible, of course. And sometimes I do zoom out to 4-hour charts and sometimes even daily charts to really understand the bigger picture, to see what is the market condition on a macro scale. Okay, so that's something you should always do. You do not have to analyze the Alligator formation on a 1-hour chart and then flip to 4-hour chart and there analyze the Alligator setup, because you will probably have mixed signals in that situation. So you should analyze the Alligator formation on 1-hour chart, for example, and then simply switch to 4-hour charts, potentially without the Alligator even attached or added to the chart, just to understand whether the market on the larger scale is trending in one direction, or it is heavily ranging, or you are about to see a breakout on a grander scale, for example. So this is definitely something you should always do, no matter what strategy you are using. Okay. And Davidson's second part of the question is this indicator on TradeView or is this privately provided? And this indicator, this Bill Williams Alligator indicator, is available by default in the MetaTrader 4 platform directly. Now, nowadays, most brokers out there do provide access to their own customized version of the MetaTrader 4 platform that already are configured to connect to their available servers. So MetaTrader 4, if you use that, you already have it available there. If you are using TradingView, then I'm 99% sure that this Alligator indicator is available there as well. Okay. Now, TradingView has a huge collection of different technical indicators available, the baseline indicators and custom-made indicators. So TradingView is a really good place to make your chart pattern analysis. But if you really want to try or start trading with a broker, then you will still be utilizing MetaTrader 4 for that purpose. And it is also completely fine to do chart pattern analysis using TradingView and then just placing trades in MetaTrader 4. That's also totally fine. But in this scenario, you must understand that the price feed that you are monitoring in TradingView at that moment may be different to the price feed that your broker is displaying in MetaTrader 4. Okay, so you may have slight differences in the entry price or in the currently displayed price, but the difference should be relatively minuscule if you are trading the major pairs mainly. Okay. Charles is asking, my question is, what momentum indicators you can use with the Alligator indicator? One of the momentum indicators is something that I already mentioned, and that is the Bollinger Bands. It's a really great indicator for any purpose. That is one of the indicators that you can actually even trade alone, in a sense that you don't add any other technical indicators for filtering purposes. You can simply add that indicator onto your chart and then monitor the actual price itself and the formations and the candlestick patterns that it's providing, and then trade like that. And that is completely fine with the Bollinger Bands, and thus the Bollinger Bands would be, I think, the best indicator to accompany the Alligator indicator. For example, here in this scenario that we have on the screen right now, I'm sorry, actually, we'd have it on the screen now. Yeah. So this is the ranging price example. Here in this ranging situation, you would have the price bouncing between the top Bollinger Band and the bottom Bollinger Band, and the channel also moving relatively sideways. Okay. Here at this point, you will probably see that the price is now touching the bottom Bollinger Band, and maybe these candles here are already closing outside of the Bollinger Bands, depending on the settings you have there, of course. Okay, and there is also Bollinger Band breakout formation that you could trade on its own. But here, just combining the Bollinger Bands and the price and the Alligator indicator, you can witness the breakout from this range happening in both. The Alligator indicator is indicating a downwards price momentum. The price is showing on the Bollinger Bands that it's breaking out from the channel that it has established already. And here, perhaps utilizing trend lines, you can also see that the trend lines here would be making this triangle shape, and then the price is breaking out from this triangle at this top left corner of the blue box. And you have basically 3 confirmations here that the price is breaking out and you should be going short, right? So definitely look into Bollinger Bands, extremely useful indicator. I cannot stress that enough. This our favorite indicator here in our team, to be really fair. So go for Bollinger Bands, I would say. Ahiaba is asking, how can a correlation be traded? Okay, that's a really good question, but it will require quite a long explanation about different ways how a correlation should be approached. So I will leave that question unanswered. I apologize, but you can send this to webinars@hfm.com to get a perhaps more fulfilling answer that I would be able to give you with a couple of words here. I'm not going to dive into that because with a short explanation, I would probably cause more confusion than any clarity. Okay, so just for everybody's sake here, not to get confused, I will pause this question at the moment. Please do send that to webinars@hfm.com. and they will be more than happy to answer as well. Okay, Charles is also asking, what is the link to get the combination of the Alligator indicator and Bollinger Band video webinar? Okay, there was no webinar that included the Bollinger Bands and Alligator indicator in the same lesson. This is a separate webinar about the Alligator indicator today, and we also have another webinar where we incorporate the Bollinger Bands mainly into a couple of our most used FX trading strategies. Okay, so these are 2 separate webinars you should be looking out for. Today, the one you were right now is one of the webinars, and then advanced FX trading strategies should be the other webinar called, and you can find that in the past webinar section. Okay. Okay, and this is actually the last question I have in the list at the moment. And as we are past the 1 hour mark by 7 minutes already, we're going to wrap this up for today. I would really like to thank you for attending today's webinar. It has been my absolute pleasure to be the host. And as always, please do trade safe, stay safe, and good luck to everybody on the market. I hope this year will be profitable for all of us. And wish you a lovely rest of the day, and take care. We'll see you next week.